here's something that you might not know. Even if you don't own Apple stock, you've been relying on it to lift the markets. It carries so much weight in the S&P that it's added a huge chunk to the index's growth over the past 5 years. Could all that change in the next hour when the visionary tech giant reports Q1 earnings? And why am I even asking that? Sales of its prime product, the iPhone, are projected to slow down. With no clear blockbuster device on the horizon, can Apple squeeze any more juice out of its flagship phone? It's a bull bear debate with our bull Dan Ives of FBR Capital Markets and our bear John Petrides from Point View Wealth Management. Dan, why the perception that suddenly the iPhone is a bad thing?
Yeah, I mean, they're a victim of their own success, and you live and die by the sword. I mean, it's the gold standard of consumer technology. They're held to a higher standard. They are dependent on the iPhone, but that's why they're the largest market cap in the world. I view this as sort of a white-knuckle quarter, especially in terms of March guidance. I think the street sort of telegraphed that. And then we get through it. iPhone 7 is really what you're hinging the growth on as we go forward.
Does it break its iPhone sales record? And listen, it's not so Fairlock to have a 73 million unit sale of something.
Yeah, I think year over year they do show an increase. And the street right now is really focused on that March guidance, putting the hard hat on. I'd say 45 to 50 million would be about the bogey for what the street's looking for. And then you sort of get through this period into iPhone 7, and really the street wants to know, look at China sales. That's the high-octane fuel in the engine that Cook's going to talk about.
Okay, does the engine peter out, John?
Yeah, I think the forward guidance for the upcoming quarter is really important. One, the Chinese devalued yuan in January, not the December quarter. So that's going to impact the March quarter. And the company's putting a lot of pressure on iPhone 7. We saw this story before when they went from the 4S to the 5 and the 5S, and there was no upgrade. There was no new form factor until Apple 6 came out, and the stock not only was down 30% in 2012, it underperformed the S&P 500 by 18% in 2013, and we're seeing that replay right now.
Buy, sell, or hold?
I would, in the short run, long term, I would not be buying Apple here. I think the company is structurally impaired until they embrace Apple TV and switch to a subscriber-based model and get away from being so reliant on hardware.
That's the whole thing. Everybody's saying, oh, it's no longer a growth stock. It's just going to be a ho-hum value stock.
And it's being valued like that right now, 7 times X cash. And that's what they really need to prove. You go into iPhone 7, as he's talked about, that's the potentially 250 million unit number. You look at China, $100 billion market opportunity. That's what we saw with 5S going to 6. But the bears right now, I mean, they definitely have this story. It's a dark cloud over Apple's head. That's why tonight it's a huge prove me, not just quarter, but more guidance going forward.
I think a big number coming out of tonight, whether they hit or miss, the team in Cupertino is not happy. And they could unleash the mother of all share repurchase programs and capital repurchases in terms of dividend growth.
That's just engineering. I don't like that because it doesn't mean I think that'll send a negative signal that they don't have anything in their back pocket.
You know, Apple has $200 billion in cash in the balance sheet, so we can't ding it for not using their cash and then ding them for using their cash. This is a period where you're in the middle of the Apple iPhone refresh, so I wouldn't be surprised if
let me just say, the stock is losing its gains. It had been up more than 1% right now. Now it's up 0.5%. You talked it down, dude. You talked it down. One last comment. If not Apple, then what?
Well,
what other stock?
Yes. So if you want to stay within tech, I would look at a company called Flextronics. Flex is the ticker, trading at 9 times earnings, a 10% free cash flow yield. Management's been buying back its stock 5% annually per year, and they're the backbone behind the Internet of Things because they're a supply chain manufacturer.
Yeah, and they make stuff. They make stuff in Mexico. And what about you?
Yeah, I'd say you really look at cybersecurity. A name like Palo Alto. That's the gold standard of cybersecurity. That's what I view as a growth, and then I could see up 50% this year.
Palo Alto Networks. Good to see you both. Dan, John, our